Hello, everyone, and welcome to another Autos Trading Live Strategy Session. This is Richard Van Rich here with Jeff Tompkins. We're really excited to have you guys with us here tonight. Got a lot of great information to go over. We also have Craig Ward in the chat who's going to be fielding questions tonight. And if this is your first time on the session, you'll notice that your microphone's muted. That's why we can all hear Jeff and Craig talk tonight. If you have any questions at all, put those in the Q&A box. We prefer that over the chat box, but put them in there, and we'll get to those throughout the evening tonight. If you have any other questions about your account, anything like access to TradeTrend Resilient, alert services, anything like that, email support@autostrading.com, and we'll get to your personal account information tomorrow. Let's see, make sure you guys can hear me. You can see my screen. If you have to hop off for any reason, know this is recorded and will be available in the members area later tonight and also on YouTube. So if you haven't already, go to YouTube and subscribe so you can get all of our future videos that we're going to be posting there as we move forward. Before I bring on Jeff, let me just read the disclaimer. Trading securities and options involves risk. Prior to buying and selling an option, investor must receive a copy of characteristics and risks of standardized options. Investors need a broker to trade securities, and options must meet suitability requirements. Past results are not necessarily indicative of future performance, and performance figures are based on actual trades, including real money results. Due to time-critical nature of trading, broker fees, and activity of subscribers, no guarantee that subscribers will mirror our performance, and performance numbers shown are based on trade users could enter based on the trade signals. So that being said, let me hand it over to Jeff. So Jeff, I'm going to grab the microphone.
All right. Hello.
Hey, how's it going?
Good.
Yeah.
Hey, guys. Hey, Keith. Oh, got a big group. When I first looked, it was like there's a few people, and now it's like a bunch of people on. Hey, Chris,
Yeah.
Catherine, Bill, Brian, Andres, Ed, Harold, Manchu, Jose, Larry. Welcome, everyone. Richard, you got to hop off, right?
Yeah, I got to hop off, definitely. But I also want to ask you guys before I go, do you guys like us doing these every single week? We've been doing them for a few months now. We plan on continue doing them. But I was wondering what you guys think. Do you guys like these? You guys like to see us every single week?
Hopefully.
Yeah, pull up in chat box. Just let us know. Because we love it. Like, we really enjoy it. We look forward to it every week. We love talking to all the traders out there, and the traders, again, is such a solitary sport, really, and it's really good to talk to other traders and share all the information and listen to all Jeff's knowledge and helping us guide through all this stuff. So yeah, definitely love it on our side, but wanted to see if you guys like it. It looks like there's a lot of good comments in there, but we really do appreciate you guys showing up.
Yeah, appreciate it, guys. So, and hopefully we make it worth your while. We're all here to make money, right? So hopefully we're helping you do that. Cool. All right. Well, I guess Richard's on daddy duty tonight, right?
Yeah, my wife's out of town for a week, so I got my 6-year-old. So she's in there watching Vampirina eat some sorbet while I do this.
I guess I'm not up to date on the kid shows. Never heard of that.
There's so many of them. Like, we were little, we had like 5. It was like Scooby-Doo or Voltron. But now there's like thousands of channels.
Yeah, it's crazy.
Yeah.
I think I only had Sesame Street growing up, so.
Oh, yeah, the Sesame Street, the Muppets.
And the Muppets, yeah. Cool. All right. Yeah, guys. So we're gonna we have some good stuff to go over tonight. We'll start out with our market overview. Since we do emphasize mapping out levels and looking for supply and demand points in the markets, so extensively, and it's a core methodology of ours. We're gonna dig into that a little bit deeper with the trade trend signals and actually look at buy and sell signals off those levels, because those tend to be the higher probability algorithmic signals that we look for in terms of momentum and trend, and that have the more of an opportunity to make bigger runs. So we're going to focus on that tonight, and then open it up to sharing some symbols you guys want to look at, and then wrap up with Q&A. So I'll go ahead and flip off my camera so that you guys can see the full screen here. And we will go ahead and get over to our platform. Let me see if Zillion has updated today. We start our sessions right about the time that zillion data updates. So it's not always updated right when we begin. Yeah, looks like we're still waiting on the update. So we'll come back to that. And we'll start with the S&P, the SPX, of course. And and by the way, as Richard mentioned, Craig's in the Q&A in the chat. So if you guys have questions, you can post those. Craig will answer any of those in the chat so that everybody can see them. If they're in the Q&A, he'll relay those to me so that I can answer them out loud, so everybody can hear the question and the answer. Okay, so obviously another really volatile day on the markets. We've been following the movements off these major levels very closely over the last number of weeks, really since the start of this year, just because there are such major levels in play. And we've talked about the resistance area up here in the 4,600 to 4,650 zone from the last week or two, and our anticipation in combination with the trade trend sell warning here on March 31st that we expect to move back down into support, and that's taken place on the S&P. And it's still actually a live signal because the trigger entry price was reached April 1st, and currently the trailing stop level is around 45.26, 45.27, with the close today below 4,400, which is significant, right? Because that's a century mark. Closing below 4,400 is something to pay attention to as we kind of follow through with this downward momentum into lower levels of support. So let's take a look at those and just see what we want to be monitoring as the market moves down. And let me get my drawing tool up here. Okay, so we've got fairly strong supports around 43.50. But to be more exact, because that is a half century, 43.75 in terms of price action is perhaps a bit more significant, just because, as I'll circle here for you, that that level has been strong support in the past as well as resistance in terms of touch points in price from the S&P, and we kind of got close to that today at the low, but not quite. And let's see, the low today was 43.81. So, there's been a strong move, and we're going to talk about these moves off support and resistance as it relates to our algorithmic signals from TradeTrend. But we've gotten a lot of this move already from the sell signal back on March 31st, and we've gotten the sell off into some areas of strong support as we anticipated. And so there's a couple, obviously, layers of support to get through before price can make any further moves down. So if this sort of 43.50 to 43.75 zone is breached, we'll be looking at 4,300, the next century mark, which is very strong support. So keep an eye on 4,300, mark that on your charts, because obviously looking back at the bottom of the sell-off in January, we had a lot of rejection off 4,300. This first, the bottom in January made it down to close to 4,200. So that's obviously one we're going to be marking here in a second as well. But 4,300, you can see here, there was a lot of support, and there was a trade trend buy signal off that support level. But look back here in September, look at all that support right around that 4,300 level. And then you'll find some other areas of support as well. So 4,300 is huge. If we break this first support zone at 43.50 to 43.75 that I marked, that would be really our next significant level to be watching. And if that breaks, then of course we'll be looking at 4,200, 4,250. But always keep an eye on these half century and century marks particularly. And then again, sometimes the quarter century mark tends to be significant, like it is on our first level of support here at 43.75. So we've got a lot of layers of support here. But in terms of resistance, that's kind of already played out. And that's, of course, something we've covered on past recent sessions. So the 4,600 to 4,650 zone. And we've talked about how we didn't expect price to get back up to previous all-time highs that were reached on the S&P early this year. And that's how it has, in fact, played out. So we're going to be talking after we mark our levels on the NASDAQ and look at the VIX about how to find the higher probability trade trend signals off these major levels, because that's step one in the process, right? Is we need to know where our supply and demand points are. So, a supply point being a resistance level where there's excess supply in the market and sellers come in or buyers unwind long positions, and then demand points being support levels, which are these down here that we've marked, where there's short sellers perhaps getting squeezed or taking profits on short positions, and buyers coming into the market. And so that's what these really are supply and demand points. And that's why you see in the past buying and selling off of those levels. And that's why they're so significant. So we've got a number of them obviously to watch here as we move lower. And as I said, we'll be looking at the significance of the buy and sell warnings off of these levels, and the importance of mapping these out ahead of time so that we know if we take a trade off a signal from TradeTrend that we know ahead of time where, for instance, if it's a long trade where our resistance lies, or if it's a short trade where our support lies. So we have an idea of what our risk to reward is potentially, and that we're not taking a trade into a major support or resistance level. We have enough room for it to run. So that's the S&P, and my expectation is we'll continue to see some downward pressure or selling in the S&P as well as the broader indices, but we could see some stalling here, and perhaps even a bit of a bounce. I don't expect a huge bounce off one of these levels, but potentially we'll have to keep an eye on it. And it's always a moving target, right? We need to keep our levels marked and see how price is reacting to those to determine that. But I suspect we'll find, just based on all the demand that resided at these levels in the past, we'll find at least some degree of buying down here, between 4,300 and 4,350. So let's keep an eye on those for the next week or so. And then take a quick look here at the NASDAQ. All right, and also a level that we have been monitoring over the past weeks, 15,200. Nice sell warning virtually right off that level in late March. There it is, right here, with a triggered entry on the next trading day. And this is still an open live signal on the NASDAQ as well. So nice move there off the 15,200 level, which was resistance, right? If we had that mapped out and done our homework ahead of time, we knew that there was a lot of resistance around that level that also served as support. And the more times that price reacts around that level, whether it's support or resistance, the more significant it is. So you can see here that even back in January, when the market started to sell off and then found a little bit of support early in January before, and a little bit of a rebound before continuing the sell-off, that served as support there too, even back months ago. So that's our major resistance. There was a nice sell signal. The other significant thing that's happened just over the last few days, trading days, is a break of major support. So that's kind of right around the, and we've, I believe, mapped this one out and been watching it over the last few weeks as well. But very, very significant because it was previously served as a very strong demand point where there was a lot of buying right off around the 14,300 to 14,400 zone. So two big century marks right there. And from September of last year, a lot of buying that resulted in the parabolic up move. And we can see some other reaction around that price zone from February, even as resistance. And then over a few trading days, a bit of support before sellers came in and really pushed price below. And now we've had two strong closes below this major, what was a major level of support. And previously, and most recently, a level of resistance. So this is very, and to give kind of a more exact, let's see, the low from back in early October was 14,384. Here in July, it was 14,455. So kind of watching that zone now as resistance. So we may see on any rebound on the NASDAQ move back up into that level. And then that's where, of course, we would want to be watching for trade trend sell signals off that level for our higher probability trade to the downside into lower levels of support. So we got another one down here around 13,700 that's big. You can see there that we had a lot of buying off that level. And after in 13,000 being a millennial mark is very, very strong. I mean, that's our kind of our more medium term level to watch on the NASDAQ. And out of everything on this chart right now, the most significant in terms of support. So you can see that the buying off 13,000 was extremely significant, right? And over the past year, we have not traded below that level, at least not, closed below it and then moved down. So 13,000 is our strongest level of support on this chart. If we break these other levels of support, and we've broken a few already, now we're looking at 13,700. If that doesn't hold and we break and get back down to 13,000, then we're really going to want to be looking for buy signals on a confirmed hold of that level, because then we have a lot of potential to move back to the upside. And then we're kind of looking at, a range bound market at that point. And then of course, if 13,000 breaks, which is very unlikely between now and next week, but if and when it happens further down the road, that's going to be very, very bearish for the market. We're then in bear market territory on the NASDAQ, and more likely to be in a medium to longer term bear market as long as the NASDAQ stays below 13,000. So keep an eye on those. These could create a lot of really good opportunities for us if we keep these levels mapped out, monitor them, and see how price reacts, and then look for the trade trend signals off of those, which we'll get into here in more detail in a second. And we'll make this more interactive tonight and have you guys share some of your symbols that you're monitoring or maybe even considering trading. And we can take a look at in whether there are any current buy or sell signals from TradeTrend and whether or not, they're off of a major supplier demand point with a higher probability, expectation of a move in the anticipated direction. So when we look at all of this in the context of the VIX, as we approach the support levels that we just looked at on the S&P and even the NASDAQ, let's look at that in the context of what's going on with the VIX. So we are at a resistance zone on the VIX. So again, we're looking at a year's worth of price data here on the VIX. And you can see that a number of times over the past year as we've hit this kind of 25 level, on the VIX, and in some cases it's actually pretty precise. It's more of a zone. So I kind of look at 5-point increments on the VIX as a zone, and anytime I get in that zone, I'm looking for a rejection back to the downside in combination with a support level being approached by the S&P. So that's what we saw. So we're at that level right now. So this could be a kind of a point of inflection if we burst through 25 tomorrow on the VIX, because the high today was just above at 25.38 and then the close at 24.26. But if we burst through 25 tomorrow, then we don't want to be obviously prematurely jumping into any long positions on the major indices or on any major stocks that trade within those indices until we see confirmation that the VIX is going to be reversing off this 25 to 30 zone, and that the like for instance the S&P is basing on a support level and then reversing off of that. And always, we always want to be using the trade trend signals along with this. So once again, and we talked about this on last week's session, anytime we get a buy warning on the VIX from TradeTrend, and again, that's the green arrow on the Thinkorswim platform here that you see on March 30th, and that buy warning comes in when the VIX is trading below 20. That's our warning that markets might be losing steam if they're moving up, which they generally will be if the VIX is retreating below 20, and that we want to be watching resistance levels on the S&P for a potential sell-off. And this was actually really great timing. So March 30th, we get the buy signal on the VIX from TradeTrend, and I don't recall off the top of my head the exact date of that S&P sell signal. Let's see, that one came in the very next day. So this is like picture perfect. I mean, this is what we're looking for, is for really good confluence and confirmation of. So we want confluence of the signals between the S&P and the VIX, and confirmation that they align up off a major level. I mean, this couldn't have been better. So 4,600 major resistance, sell warning March 31st, right after the buy warning, because of course the VIX and S&P are inversely correlated from the VIX. So this actually gave us our advanced warning even before the algorithm caught it on the S&P. But there's our buy from TradeTrend as the VIX is retreated below 20. And sure enough, it found support, and the VIX has spiked all the way up into just above 25, right? So when the buy warning came in from the TradeTrend algorithm, the VIX had closed at 1933. So it went from 1933 up above 25, and just about a week and a half, or a little under 2 weeks. Let's see, 1, 2, 3, 4, 5. Yeah, so almost 2 weeks, a little under. As the S&P hit resistance and got a sell signal. So this is like picture perfect, and this is what we want to look for in a nutshell. And we'll dig a little bit more into it here in a second. So that's the market overview and analysis and the levels we're watching. So I'll pause and Craig, see if any questions have come in that we want to address before we talk a little bit more about the trade trend buy sell signals.
Yeah, I had one attendee ask, do you think that more testing of a support level weakens or strengthens?
Strengthens. So the more times, but let me clarify that. So there's two ways that a level can be tested, right? It can be tested as support, or it can be tested as resistance. And often it's tested as both. So we kind of want to look at both sides of the equation. So as I map a level out, so let's just use the most recent level here on the S&P that we're watching, kind of right around 43.75. Okay, this is the one and always look at the levels on the basis of time, right? So obviously 4,600 now is really not in play if for the short term. We've already moved off that level. And that's why it's so crucial to map these out ahead of time. So look at the levels that we're looking at, consider, where is price relative to that and how far back has it reacted to that level? Well, 43.75 is our most relevant level to watch right now. And then we want to ask ourselves, is it support or is it going to serve as support or resistance? Well, price is above 43.75. So of course it's going to be a support level. Now, when we look historically, it doesn't necessarily always have to have been a support level. In this case, it was a number of times, right? We see a lot of cases where the lows of a trading day came close or touched that level and then moved off. So that's the second question to ask yourself. When price was near that level or touched that level, or maybe even passed it and rejected it, and then there was a reversal day and price moved below that level but then closed back above. So that's the question to ask. What did it do off that level? So that's kind of what the picture that I'm painting for myself as I analyze this and deciding, were there more buyers or sellers at that level? Well, looking back over the past year, and typically a year is sufficient to make that determination, I see a lot of buying off 43.75, right? Now, as I mentioned, it could also serve as resistance. So like this is, again, more of a zone between 43.75 and 4,400. And that's why we don't just, map one level. We map any level where we see multiple turning points in the market or a stock or an ETF or whatever we're trading. This is universally applicable. So I see resistance as well here, right? And areas where price is actually sold off from this level. So to answer that question, it's a really good question. Look at how many times it served as support versus resistance. Was it just one or the other? Usually it's not. Usually it's going to be both. And then what is price currently? Where is it currently relative to that level? And what is it doing? Is it moving into that level or away from it? And those are the key questions to ask yourself. So right now it's moving into support. Right now, as of the close today, moving into the 43.75 support. So always be asking yourself. And then if you take a directional trade, regardless of, how you're trading it, whether it's with options or, there's obviously a lot of different option strategies we can structure around these levels, whether it's, actually shares that you're shorting or buying, maybe it's futures contracts, however you're interacting with the market and placing orders and taking a position, look at where price is relative to these levels and how it's moving with that level. Is it moving towards it or away from it? And if it's moving towards it, what's happened in the past where price approached that level when it was moving towards it? So see how here, so that's always an important consideration. Was it moving towards it or was it moving away from it? Right. So, and if it moves towards it and then that level holds and it makes a big move off of it, and especially if it comes back down and then goes through it again, that just lends more strength to that level or the zone. If we're looking at more than one level, which we always do. Again, we don't look at just one level, but we want to be keeping an eye on how many times did it touch? Was it support and resistance? Was it both? And what were the most significant moves from there? Like 4,300, a lot of buying. 41,000, or sorry, 4,100, a lot of buying. So the importance of this is we don't want to be taking a short position into a really strong support level, and we don't want to be taking a long position into a really strong resistance level. That's where people get trapped and chopped up. Whereas if you kind of take a contrarian approach because remember, when markets sell off, people panic. They take losses, and then they're afraid to get back in, and they miss the move back up. That's the typical pattern of a trader or an investor. So if you kind of take a contrarian approach and don't fear the sell-off, look at it as an opportunity, and wait till, be patient and do your homework ahead of time. Wait for a level to hold, for instance, a support level for a long trade. Then you're gonna, be in the minority of people that get in on a rebound, or you're going to be in the minority of people who get out before the market, tops out and reverses and wipes out all your profits. Because again, that's what's happening to most of the crowd, and that's why it's crucial to map these out ahead of time to help prevent that. And we can't prevent it 100% of the time, but at least we have a pretty good advanced idea of what's likely to happen, and we can protect ourselves. We can plan ahead, and we're not getting caught, by the seat of our pants where we weren't prepared for a major reversal, whether it's up or down. So that's a really good question. So the more touch points, the magnitude of the move off of that, whether it served as support or resistance, where price currently is relative to that level, and is it moving towards it or away from it? And then the final step that will be the focus tonight is, do we have a momentum signal? So TradeTrend is built and designed to identify momentum moves, and that's why you see at a lot of these major shift turning points in the market, buy and sell signals, what the algorithm is looking for is, if there's a move up, for instance, slowing momentum and decreased buying pressure, and then if the algorithm picks that up, it will print a red down arrow and then provide a suggested entry to the downside. And then conversely, on a sell-off, it's looking for buying pressure after selling is kind of dried up and momentum is reversing. Okay, so that's why you'll see a lot of these at major turning points of the market, and they're not all equal. So again, here's a buy signal. Although it was actually profitable, I would have never taken this. Here's a buy. Let's see, that was on December 23rd. The entry would have been just above the high of this candle. Let's just call it around 47.45. Did get a nice move up the next day. And if you use the trailing stop algo, the exit would have been kind of around 47.70. Okay, so it picked up 25 to 30 points depending on where you got in and got out. But look at this. This is major resistance. This would have been a resistance level around 4,700 to 4,750, a zone that I would have already marked. And there was this buy signal was right into it. I would have not taken this, even though, yeah, it did pick up a little bit of a gain there if you'd taken a trade off of that. But obviously not a big one. Now, this signal in early July was much more significant because it was a sell on a strong reversal off a resistance zone. And obviously this one resulted in a much bigger move than this little one. So these are the ones we want to be looking for. We want to be looking for sells off of resistance and buys off of support. And those are the ones you're typically going to get bigger moves from. But we want to be making sure that we're not trading into resistance. So that's where that becomes such an important exercise to map those out so that we don't take any of these buys into resistance or sells into support. So sorry, I went a little long with that, but that's what we want to be looking at for tonight. I was going to cover that anyway, and it was relevant to that question, which was a really good one. So yeah, thanks for asking that. And any others?
I appreciate that. That was a lot of good information there. Brian asked if you would call that a head and shoulders pattern on the SPX.
Yeah, It is. It's kind of a complex one. Like we've got like a double head shoulder pattern. So we've got which, you know, I don't really trade in like complex patterns like head and shoulders and stuff, but I watch for them. I think some of them are probably more self-fulfilling prophecies or not. I don't know that there's any real significance behind them, other than a lot of people watch them. But yeah, so we've got, yeah, that was a good spot, Brian. So yeah, we've got kind of a shoulder, left shoulder there, right. And usually like when we see the right shoulder, I call this like a leaning head and shoulders, where the more recent shoulder is lower than the previous one. Cause you know, here's the head right here. It's often more of a bearish sign because it couldn't even get back up to the left shoulder. Yeah, that's kind of that head and shoulders there. And it's playing out because the neckline is, you know, different people draw it differently. Let me clear this up so it's a little easier to see. So the neckline would kind of be right here at 4,500, and we've broken that. So again, there's the left, right, head, and then neckline. So you can see a lot of support or resistance around 4,500 century mark. And then kind of the bottom of the torso is again down here around the 40. Well, we've already mapped these out, but 4,300. There's just a lot of levels of support down here. That's why, you know, any short positions are going to be getting more and more tricky to manage as we get into these lower levels of support, just because there's so many of them. There's pretty much one at every half century mark, 4,200, 4,250, 43, 4,350, where, you know, we're looking at potential support across pretty much every 50-point move in the S&P. So it's going to get a little bit more tricky as we move down into these lower levels. And maybe you're not, maybe, you know, there are some of our members on tonight aren't, you know, shorting the market. They're looking for more you know, long opportunities. So these are levels that you'd be looking for potential buy opportunities. But again, if they happen down here at lower levels, then we've got all these support levels right here are going to turn into resistance. Right. So when a support level is broken, it becomes resistance, or vice versa. When a resistance broken, it becomes support. So you know, that's potentially going to create a little bit of trouble down at these lower levels for long opportunities as well. Yeah, we do have a head and shoulders, really, I think, on all the indices, NDX as well. Yeah, just, you know, a lot of interpretation here. It's like more of an art than a science, but you know, that this doesn't look the same as the S&P. But the key with the head and shoulders is you got a strong move up, followed by a retracement, and then a stronger move up that tops out. And oftentimes you'll see like a double, triple, quadruple top, then a move back down into support around 14,400 in the case of the NASDAQ, and then a move back up somewhere close to that first move. But again, same thing with the NASDAQ here as the S&P. This right shoulder didn't actually, or left, depending on how you look at it. I call it the right shoulder. Technically, it's the left anatomically, but didn't, you know, reach the level of the other shoulder. So, and then anytime you see like a head and shoulder with the neckline break, and again, that just happened here over the next couple of days, because I would call this the neckline. This is where the left shoulder formed, came back down, found support, and then the head formed. That retracement after the left shoulder forms is the one that forms the neckline. And then you just want to look for too many drawing tools here. Look for that neckline to find support or resistance in other areas. And so we're seeing that here around 14,300. So yeah, got some big head and shoulder patterns across all the indices. Any other questions there?
Yeah, I know you say you don't necessarily trade off these patterns, but when you look for other ones, sort of like M or W, do you kind of look for like support and resistance levels using those formations, or?
Yeah, exactly. Like this was such a good buying opportunity back here in March. There were probably, this is just speculation and a guess of mine, very few retail buyers here. If you guys were one of them, congratulations. Most people were probably so panicked after this huge sell-off in only a matter of a month or a month and a half, that a lot of people lost a lot of money and then didn't have the confidence to get in as the market's bottom. But this was actually a really good, and of course, we're speaking in hindsight, I realize that, but it doesn't have to be, because look from back in May, and if you had done your homework, you would have known 13,000 was a major demand point. There was a lot of buying back there. And then when mid February rolled around this year, we saw it once again serve as support. So as price came back down, and you had mapped out 13,000 and then waited for it to hold and move back up. And then if you were aggressive, perhaps you could take a long position off of that, just right off the level. Or if you're more conservative, maybe you wait for the trade trend buy notification, which came in mid-March with a confirmed entry trigger the next day. And nice move up. I mean, this one was a little tricky too, because there was strong resistance. So I would have been, I didn't take this signal personally, but I would have been a little bit, actually, let me draw that better, cautious on it because of this. I mean, it had some room to move before we hit resistance, which the time was around 14,300. But the entry would have been just above the high of this candle. So, around 14,150. So it had a good 150 points to move before we got into resistance. But the very next day, we closed strongly above it. And that level held because, again, once resistance breaks, it becomes support. So then we had more confirmation that the move is likely to continue up into higher levels of resistance. Yeah, so definitely these double bottoms can be very strong signals. And if they become triple or quadruple bottoms or tops, it works both directions. Because, again, we saw this at the end in Q4 of last year, right? Pretty much a triple. I mean, I really call this, let me just clear that out. I mean, we hit this level so many times. Here, 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 more days than we can count, right? We were hitting this for 16,500 to 16,800 zone. So anytime you see that, those can be great levels to either take short positions off in the context of resistance, or long positions in the context of support. So I'm anxiously awaiting the NASDAQ to get back down around 13,000 and looking for that to hold as a triple bottom to get a more aggressive long position back up. Because then I've got a lot of room to move off 13,000 before I run into some fairly significant resistance here around 13,600. So as long as, and sometimes sometimes it's just not possible, like, because this is what happened actually on this day. And this is a good one to emphasize. So notice here on, was it February 24th, that the market came down close to 13,000. It bottomed at 13,065. And look at that enormous, I mean, this is a very unusual intraday move in terms of the range that basically, did it even go below the open? Barely, by a couple points, and then moved up and closed virtually at the top, the high of 13,967, 13,974. So bullish candle. This would have been obviously, unless you were aggressive and had been monitoring this 13,000 to 13,100 zone, would have been a hard one to get into if you're waiting for the level to hold, right? Because the move happened all in one day. So for a conservative trader or investor, that would have been a hard one. For an aggressive, if you had been looking at this 13,000 zone, could have been a big winner in just a matter of one day because it already moved up into resistance. That reminds me something to mention. Look at these as zones. So like if we get back down to 13,000, we don't want to assume that price is going to actually hit 13,000, and it doesn't have to. That's why we use zones. So what would be the next area? And this is what institutions are looking at. They're not looking for necessarily an exact touch point of a price level. They're looking at a zone. So that's why I emphasize the century marks or even the half or quarter century marks. So even though 13,000 would be the millennial mark and it's significant from past price action as a demand point, we want to be looking at a zone. So generally that would be on the major indices like the NASDAQ or the S&P. Those would be century marks, 100-point zones. So if we wanted to, be aggressive as a buyer into a major level like this down here at 13,000, I would mark my zone as 13,000 to 13,100 if I wanted to buy aggressively without waiting for a bounce or confirmation. And that would have been possible if you had marked this century zone here before February of this year. But even if you miss it, never chase anything, right? Because especially if you've already moved up into resistance, do not chase it, because that's where people also get trapped. So if you had chased this, like a lot of people probably did, oh darn, I missed it. Look at that huge bullish move back up. But for all the people that don't map out support and resistance levels, that was right into a resistance, and sure enough, price stalled, went sideways, and went right back down. So there was two opportunities here to get in. So if you miss it, don't kick yourself. And generally these spread out. So like this one, double bottomed fairly close to each other, right? Just in a period of about a month from mid-February to mid-March. And then they tend to get a bit longer if they retest. So this one now is, from mid-March, now we're getting into mid-April, but we're still a ways off that level if it does come back and touch. So it might take a little bit longer. So they tend to spread out and see that happen here. So there's a quick one, a couple quick ones, and then see how it's spread out there. That's generally how we see it happen. And then if that happens here, there could be a third buying opportunity down here. So it's always important to be patient, really wait for these. And it's a good like kind of self-check exercise to do to keep yourself from over trading and exercise patience. So when these levels come into play, you're ready, and you're taking the higher probability ones. So off this double bottom, we didn't get. I mean, this signal was good. I would have been hesitant with it due to the overhead resistance. This one basically didn't go anywhere, but that's the nice thing about our algorithm, the trailing stop algo. See how before this thing went all the way back down to double bottom, it was basically almost a very small loss. So let me see. So the algorithm's there to help protect, even when you're not, if we make a mistake or we're not monitoring our levels very well, this one would have been just a small loss relative to like this successful one, which is a bigger gain. So hopefully if you're taking the buys and sells off these major levels, you're going to see much bigger gains than you are losses. Typically the losses off these levels should be very well contained because they're being taken from a significant price level. And the ones that pan out nicely tend to be the ones that run a long way. So you've got a nice risk reward setup there with the algorithm. And the reason why we're focusing on the session tonight on that is it's very important to look for these buys off support or sells off resistance. And then number two, make sure that you're not taking a buy into resistance or a sell into support. And also don't jump in, when it's too late, like we just talked about. Even though there's still an open sell right now on the NASDAQ, for instance, this one's already made a strong move, and now we're down into support levels, or we're coming into some more strong support, and the entry, would have been right about here. Well, it was sell stop limit was at 14,805, right? So the NASDAQ closed at 13,940. So we're already, hundreds of points below the entry, and our trailing stops up here. And frankly, I would I use the trailing stops from the algorithm to some degree, but I also use support and resistance as more weight. So I would actually have my stop down a little bit lower if I were short right now, the NASDAQ above 14,400, because that's where actual strong resistance is. So it's good to use these, not just the buy and sell signals, but also the trailing stops in the relative to our support and resistance that we map out as well. So do we want to, it looks like maybe some symbol suggestions are coming in. Craig, do we want to relay some of those to me? I'm going to switch over to Zillion here.
Yeah, that about answers all the questions that we had. The first one is Amgen's, ticker AMGN.
Okay, let me refresh the dashboard here. All right, Amgen, good old pharmaceutical stock. Good company. For those of you who don't know, I used to be in the pharmaceutical industry. Worked in the pharmaceutical industry for about 15 years, and so I'm pretty. I don't do a lot of trading in pharmaceutical or biotech stocks, but I know a lot about a lot of these companies. I'm actually pretty familiar with Amgen. Really, actually, good company. If I were more of a buy and hold investor, it's one I would, if I were, buy and hold, it's one I would probably consider holding for the very long term. But yeah, so this one has had a nice run up recently since December of last year after, and there's another double bottom. So this is kind of a good example to look at as we emphasize what we've been talking about. So obviously strong support zone down here. And then, we've had some buy signals off of that level where prices moved up, off around, 203 up 5 to 7 points. And then we got a nice buy here. And again, keep an eye on these century zones. So that's also a century zone around 200, but nice buy there. And we got the follow through. So that the entry would have been on a buy stop just above the high of the warning candle. So remember, guys, these the warnings, and again on Zillion, the symbology is a bit different on all the platforms we have TradeTrend on. On Zillion, it's a white diamond below the candle for a buy or above for a sell. So this is a buy, of course, and they're good for up to 3 days on a daily chart. So if they don't follow through and hit the suggested entry price after the 3rd day following the pending signal, then some of our members do still take the trades, but the algorithm considers that a null signal at that point. And you, if you want to follow the algorithm exactly, you would cancel your order and wait for the next signal. But this one actually hit on day 3, so there was the confirmed entry and made a nice move up. But there was a lot of volatility right around this time. Not sure why. May have been earnings. And trailing stop was just too tight. So it would have been a nice little tidy little profit there of 2 or 3 points, but nothing major. And Amgen's an optionable stock, so I like to trade options off these by selling puts or setting them like a vertical call debit spread. So then I don't really worry about the trailing stop so much. I typically only use the trailing stop if I'm or at least take it into consideration if I'm directly trading shares of the stock. But then this one did make a nice move up into the green divergence cloud. This one, this signal here is one I wouldn't take because it was not off a support level and it was in the resistance. Now this one, it was a sell off of resistance. And it was after kind of in between or following the end of the green divergence cloud. So you can see back here, there was resistance and a big move down. So this one would have been a viable signal. And again, if we take a short off that, we always want to know where our support is then. So anytime you take a short, know where your support is. So months before this sell signal even came in, the support was at 220 because it was previously resistance. And you can see price came very close, if not touching that level. And then that served as a support there and moved off. So again, if we had mapped that out, we know our support's at 220. We know our resistance is around 235. So then we want to be watching how does price react on that, and do we get any signals? Well, there's we see a support here holding, right? We had one day of a break below, but then price closed back above. So 220 strong support, right? We know that by looking at the chart. We get the trade trend buy kind of around, it looks like third week of February. This one also triggered on day 3. So there was the triggered entry on this candle here. So this is a great signal right here. The one that occurred, what was that? February 25th on Amgen. Great buy signal, off support, not too much overhead. There was some resistance here around 230, 229 to 230, but the entry I would have just put above that anyway, because it's above the high of the candle, above resistance. And then we got some nice follow through. This one I would have been hesitant on because of this 235 resistance. So this is one, if I was interested in going long Amgen on a buy, I would wait for to see if this thing actually goes through that level and then comes back down and retests and then moves off of it. So that's how if you do want to take a buy, for instance, into a resistance zone, like you just, for whatever reason, maybe you have other indicators or ideas about what the stock will be doing, and you really like the stock and you just want to get long, and the buy signal comes in into resistance, and you're kicking yourself, like, oh, what is it? I think the stock's going to go up, but I just noticed that I mapped a resistance level at 235 and the buy signal came into it and I don't want to take it. Well, that's where you want to be patient. Wait for it to see if it follows through in traders, and then see if it comes back down. So that's the here, because again, we've got strong resistance here. And so that's where there's caution needed there. So then if it does come back down, wait to see, does that resistance, because once it breaks, it becomes support. Does it hold as support and then follow through on a move back? And there's where you could look for, a long position. And then, we'll get into probably, I've got some money management sessions lined up in the coming weeks. We'll get in more to that. But you'll see as these weekly sessions play out how crucial these levels are in so many ways. Because the other is money management, and using these levels to scale out. For instance, a long position, you would use resistance levels to scale out, and then use them to move your stop loss levels. There's so many things that they serve a purpose for. And so if a long position be taken, these are the resistance areas I would have mapped: 240, 245. And perhaps areas I would be looking for profit targets to scale out, moving my stop just below these levels as they're breaking, because then they turn from resistance to support, and then managing the remaining open position up into higher levels of resistance. And that's really the whole process. And we'll get into, again, more into the scaling in and out and money management aspects of this as it relates to support and resistance and buy and sell signals. And so right now, same thing. So we have this 245 level now mapped as previous resistance from back in the start of February, broke. What's happening right now? Coming back down, we got a sell signal and a potential retest. So if I had missed this buy signal that came in here in late March, which was a nice one for a while, then that would be okay. I can be patient, wait for price to come back down to 245, see if it holds. And if I get a buy signal from the algorithm, there's my higher probability, because I already know it's a strong was a strong level of resistance and now a strong support. So I see there's a lot of cool things on this chart to look at of Amgen. So it was a good suggestion. Thanks for sharing that one. Let's take a couple more, Craig.
Sorry, gold.
All right, just GLD or any particular, there's so many different gold ETFs.
Yeah, we can do GLD.
Okay. All right, so obviously gold, it's, this year has been on a huge run up. Earlier in the year, it was basing around 166 and has traded as high as 193.30. This is GLD, the Spider Gold Trust ETF. So right now it's ranging, but there's strong support in this zone down here around 175. And again, this is a zone. So 175 to 177 is a very, very strong zone on GLD. So any of you gold traders that might be looking at long opportunities or short opportunities in the future, keep an eye on this zone here. You can see that currently, because price is above 177, that is a support level. And previously, that 175 area is strong resistance. You can see that here. Broke and then became support. And this is just more confirmation that we know these are strong levels. I mean, as you do this and more, it becomes easier and more apparent, but you see there resistance. When you see price blow through and then come back down and retest, that's our real confirmation. That's a real demand point. There's actual real institutional buying going on around that level. And then there it is again. There's coming down to the retest, boom, retest, boom. So right now, ranging sideways, we're at near resistance right now. And that would be kind of right around the 183 to 184 level. But you can see that there's a lot of price resistance there and rejection. So although the ETF, the GLD ETF closed above that today, that could potentially be a false breakout. So keep an eye on that. And look for either price to stay above and maybe even move up off of it, and then for it to come back down and hold for a potential move back up, because there's a lot of room up into resistance. If we can hold this 183 to 184 level, we don't have any recent overhead resistance until we're up near the 193 to 194 zone. If this level ends up serving as resistance around 183 to 184, then we're looking at a potential move back down into support. And then we're kind of, depending on how you're trading it, that could be a ranging play or, an iron condor setup, or with the spread, call spread above resistance and put spread above support or below support, or, buying and shorting off, these support and resistance zones. Also glad this one was shared, because when you see a lot of price consolidation, like right here, I ignore momentum signals from the algorithm. I do not want to be taking, so this buy, even though it has moved up off the entry, no thanks. I don't want to take this. Too much price consolidation. And a lot of times these won't even result in a triggered entry. That one did not. This one did, but that one would have been no good. So there's an open buy right now on gold, but and it's in profitable territory if you take a long trade off this signal, but too much price consolidation. And really for this long, I wouldn't ignore it completely. If I were to take a long position on GLD, I wouldn't ignore this one just yet, even though it's open. But I wouldn't have taken it into this resistance. I would wait for, like I just mentioned, to see if that holds, and then price comes back down to retest. And then if it starts to move off that level again, that's where I would be a more aggressive buyer of GLD up into, that kind of that 192 to 194 zone. So also a good one. So we're a little bit past the hour. Let's take one more. If we have one, Craig.
Yeah, U.S. Steel.
U.S. Steel. That's just X, I think, right?
Correct.
I haven't looked at this one in a while. This is one I have traded before, and I've traded options. I've sold puts on US Steel in the past. Wow, huge move up off the 18 level. So, man, this thing more than doubled since the start of this year. I wish I had been watching this because there was a good buy down here.
Yeah, I've been watching that one myself. It's because of the Russia-Ukraine situation.
Exactly. This is kind of a politically driven stock. Yeah, so this was a good buy, being that the entry above the high here was above this what would have been at the time resistance. So that was good. Obviously very volatile. This one was a really good buy signal. So see how if we had been mapping out our levels, when this buy signal came in, it looks like right around the end of February, early March. So there was the warning there. If we had mapped out 26 from resistance back at the end of last year, early this year, seeing the buy signal above support, boom, that was a really nice one. Again, this is a good example because these are the buy signals that I like off support. And it gives us, I mean, obviously there was a run up off, well, the entry would have been above, let's just say kind of right around 2750. This thing picked up more than 10 points off that level, off that entry price. And 26, 36, like 13, 14 points off the level. And let's see, I'm gonna just check this one. Made a really nice move. So again, there's resistance. So if on this buy entry, if you miss these, this one did move parabolically really quickly over just 3 or 4 days. You'll often see these come back down and retest. And so it didn't retest this 26, but it did retest the looks like 2850 half century mark. So that's why you want to map out multiple levels, because even if you had missed this 26, there's a further a level higher up around 2850 where there was a retest and a potential entry. And yeah, this one looks good. Right now, though, it looks a bit toppy. There's again some price consolidation here going on there. So this one actually is looking a little bit toppy. So I would actually zoom out on my chart a bit more to see if I can get a better picture of what's going on up near that level. And it could be that, you have to go way back. But again, depending on like I don't like being a buyer way up at, 52 to 104 week all-time highs. So 1 or 2 years back, if we're at an all-time high, that's a risky buying spot. Or, I wouldn't be selling puts because I do a lot of put selling way up here, especially after a parabolic move. So again, the key to watching this, and this is good too. Like so you can see once I zoomed out, now we're looking at, over a couple of years of price data. I can get a clearer picture for where really strong support might be. And I see that around like the 28 to 30 zone. And you can see all these where it was previously very strong resistance, kind of right in this 28 to 30 zone. So that could be like a buying opportunity if price were to come back down, or maybe, I would look at selling puts below a couple layers of support if they hold in for instance, a buy signal comes in from TradeTrend. So right now, this one's probably a difficult trade, whether to either direction, just because it's not at a good supplier demand point. But if it comes back down like in the 20 to 30 zone, this could be a really great, cool opportunity for more of a long bias trade, or setting up a bull put credit spread, or selling a put, or so many different ways we can trade these opportunities. But this one has some potential down the road, I think. Right now, it's just probably not. There's not a lot to take advantage of until we get back down to some lower levels of support. So thanks for sharing that. That was a good one to wrap up with. Any final questions, Craig, before we sign off for the night?
Wrapped up.
That's it?
Yeah.
All right. Well, thanks, everybody. Yeah, thanks, Raju and Moshi. Good to see a lot of the familiar names on. And if I didn't get to yours, I apologize. I'm kind of trying to alternate every other week. We'll kind of spend more time next week just on symbols that you guys want to look at. So we'll do that on our next session. But hopefully you guys got a lot out of tonight. Again, if you have questions, email us support@altostrading.com. If you want to check out Zillion, you can. We have officially launched Zillion to the public, and you can find out more about that at zilliontree.com. And hope you guys have a great rest of your night, a great rest of the trading week, and we'll see you guys very soon. Take care.